How to invest in a mobile home park. What if I told you the highest cash flowing asset in commercial real estate is not apartments, it's not retail, it's actually mobile home parks? In this video, I'm going to show you exactly how to invest in mobile home parks and why they are gaining so much momentum. Most investors overlook mobile home parks. They're not sexy, they're older, they're not very attractive, but they are outperforming all the other asset classes. And in this video, I want to show you exactly why. If you're looking for real estate that has low turnover, high demand, and a lot of upside, then watch this video. Mobile home parks achieve all three. And I've been focusing on them for the last 20 years, buying these properties. And I'm going to show you exactly how to invest in them like I do. So by the end of this video, you'll know exactly how to invest in mobile home parks, what to look for, what to look out for, and then how you can get started in investing in this cash flowing asset class. So first, what is a mobile home park and why are they such a powerful investment? Well, when I say mobile home park, I mean a land lease community. You'll also hear the word manufactured housing community. It's the same thing as a mobile home park and a trailer park. That is the outdated name for older mobile home parks, but they're all the same thing. And I want to focus on what makes a mobile home park such a good investment. Well, number one, affordable housing. We're in an affordable housing crisis in the US. It's not going away. And this is why this asset class is in such high demand. There is no better affordable housing than a manufactured home community. And the model that we look at, or any strategic or savvy investor will focus on, is where the landlord or the owner owns only the land. We're not talking about owning all the mobile homes. We're talking about renting each space to a tenant that owns their own mobile home. Next quality is low turnover. Rarely do people move a mobile home because it's not very mobile. The costs to move them are $10,000, $20,000, $30,000. Plus, they're very hard to find another space or another area the town will allow a mobile home into. So you get very little turnover with this asset. A key piece is, as I said, tenants own the homes. It's pride of ownership. They own their own home. They lease the land. And ideally, they pay for their water, sewer, trash, power, and you only own the land. And this is what drives profit margins in these affordable housing communities. Recession-resistant. So good markets, bad markets, but especially when we're entering a recession, mobile homes do well. This is the most affordable asset class or affordable housing out there in commercial or residential real estate. Mobile home lot rents run anywhere between 50 and 60% cheaper than an average apartment. And you cannot duplicate the size and quality of the housing for the price. And lastly, there's limited supply. There's very few mobile home parks being built in the country, and zoning departments, residents, they do not want them in their backyard. So the infrastructure that's out there, the existing communities, it's pretty much a fixed supply of mobile home lots. So as they continue to get bought and redeveloped, there's less of a supply in the market. That causes them to be in higher demand and over time will appreciate in value. So I've been investing in mobile home parks for nearly 20 years now. And what do I look for? Because I've learned a lot of rough lessons owning a wide variety of types of mobile home parks. There's really, really low income inner city parks. There's rural parks that are also low income. And then there's quality senior parks or quality working class family parks that are spread throughout rural and suburban America. What I noticed is, number one, you want to buy parks in the beginning that are at least 80% occupied. If you're buying a mobile home community with 30 or 40% occupancy, that is a heavy lift to buy mobile homes, install them in spaces, and then sell that mobile home to a qualified buyer, get them financed, and then eventually they're paying lot rent, which generates a lot of NOI. It generates a lot of profitability on the asset. But the problem is the lift. It is very management intensive. It's essentially two businesses, selling homes and operating the community. So I would stay away from that as a beginning investor. Next, focus on the utilities. You are truly buying infrastructure here. Roads, water, sewer, power lines. This is the essential aspects of mobile home parks. So when you're buying these parks, what I do here at Patriot Holdings is I'm looking at what are the quality of the water lines, the sewer lines. These are going to be the biggest expenses that you'll have to update if the park has 50 years of deferred maintenance or deferred capital expenditures that aren't being performed. They could be massive water leaks. There can be sewer penetrations with roots getting in there. And then you have a heck of an issue on your hands because you have non-working utility lines and the tenants are counting on it. Next, you want to focus on the roads. The roads tend to be the next largest capital expenditure. And They really set the tone of the community if you have a nice community or not. Paving makes a big difference. Having nice paved, clean, flat roads create the right curb appeal and the right feeling for the community and the residents. And it's a large expenditure that you want to look at and budget for. Next is the pad count, meaning how many lots or how many units are in the community. Now I focus on 75 to 150 units in a mobile home park. This is spaces. They also call them lots. This gives you enough of a margin or enough of a gross profit and income that larger parks allow you to pay the operating expenses like an on-site manager, like some of the long-term maintenance, where you have enough revenue coming in that justify making the investment. If you're buying a 10 or 15 unit mobile home community, if you hire an on-site manager, which I highly recommend and suggest, it's going to eat up all your profit margin. So try to stay near larger communities, and that's going to create the most upside and the most profitability on any mobile home park investment. Lot rents, right? Any commercial real estate, you're going to focus on what is the current rent, what is the market rent. And where there's a lot of value, but yet a lot of controversy in the market is charging too much rent too fast or above market rents and truly hurting the tenant's position or their ability to pay the rent in that community. So looking at what the market rents are and what you offer in the community is critical. Those are your comparable rents. And then buying a community under market rent is the focus if you're looking at value add investing, which what we do here at Patriot. And then we gradually raise the rents. The first year, if you're making large improvements, can raise them more significantly, but still keeping them under market is very important. And then gradually getting them to market. So that way the tenants can afford to pay the rent and you're not taking advantage of anyone in their housing where they're not able to pay the rent, yet their house is still on the lot and they can't move it. We're seeing a lot of rent control out there because a lot of irresponsible investors raised rents too quickly and then created hardships for their tenants. And then lastly, focus on the market that you're in. I've bought mobile home parks in the middle of nowhere, South Dakota, Wyoming, in Nebraska, and they can be profitable, yet if the market is not growing, if there's not schools, if there's not retail, if there's not hospitals, you're always in an uphill battle where you're not going to find the right tenant base because people can't afford to live in these communities without real services. So focus on growing demographics, good housing costs there, anywhere between $250,000 to $500,000 as a single family home. That way there's a high demand for affordable housing where mobile homes sell anywhere from $10,000 up to $250,000, depending on the market you're in. But those markets with higher incomes, or at least median incomes that are above $60,000, $70,000, $80,000 and higher costs of housing, drive a lot of demand to the mobile home parks. Plus, you want the services in the area that any tenant or any resident would want to have where they live. Okay, so how the heck do you find mobile home parks for sale? Well, obviously, if you're in real estate and you're an investor, looking on market is the first spot you're going to focus on these assets. You're going to have websites like LoopNet, Crexi, CoStar. These are listing services for commercial real estate. These sites you're going to find overpriced properties, and there's very little opportunity by the time the mobile home park actually hits the market. Yet, it's a great way to start evaluating deals and looking at what are quality mobile home parks selling for, if they even show up there for sale. Second is brokers specializing in mobile home parks. I've noticed this in a lot of other areas of commercial real estate where brokers control the deals. So especially in mobile home parks, brokers that specialize in mobile home parks don't typically list the park nationally on any type of large listing service like LoopNet. So you're not going to see the mobile home park ever come up for sale because these brokers want to control the deal. Typically, they want to get both sides of the commission from the buyer and seller, and they're going to try to sell the asset off market to a credible buyer. So over the years, I've focused a lot on building these relationships with brokers where they know I'm going to execute. I have a track record. Now, when you're first starting out, it's important to talk to them and tell them what you can and cannot do, what you do not know. But ultimately, they want to trust that you have the ability to execute. And these are the national brokers. If you find a local broker that controls the mobile home park, they'll probably be less picky and they're not specializing in this asset class. But yet you still want to build these relationships because they are going to be the most profitable or the most volume of deals that you're going to see. And they are the ones that control the majority of the transactions. Lastly is direct outreach to the seller. This is the way that I built my career. So when I started out in real estate in 2006, 2007, at least the commercial area, I focused on off-market deals because one, I looked like I was 13 years old. And two, I didn't have much money. So I brought in a partner and that partner funded the deals. My job was to find the deals. And this is how I found them. I built a list through MH Village, through data sources, pulling deals off of the internet and just researching one owner at a time. I would pull lists nowadays through Reonomy. These are data services. You can aggregate a list, and then it's just hard work. You have to earn a deal. What does that mean? Well, you have to go out and solve problems for sellers, because the advantage in mobile home parks is that they are heavy management intensive and they're heavy capital expenditures. We have to invest in these assets, and many of the owners, first generation that have bought them or built them, they've owned them 20, 30, 40 years, and they get to a point they don't want to manage it anymore. They don't want to put any more money in the asset. So outreach, direct outreach through calling, texting, emailing, mailing, anything that you can do to build a relationship, which it takes time. I've dealt with people for 10 to 15 years since I started, the same families, the same owners, and then eventually built that trust up where when it was time to sell, they'd give me an opportunity. And do you get a good deal? Not always. And sometimes they list it with a broker, but at least you get an opportunity first to evaluate the property and then put that offer in. And there's a higher likelihood that you can set that deal or you can structure that deal in a way that's a win-win, and it creates value for myself and for my investors as the buyer. Next step, how do you finance mobile home parks? Well, when I started out, KeyBank just lost all of their mobile home parks in their mobile home park portfolio to default. This was in 2006, 2005. And actually in the early 2000s, there was a huge credit issue with mobile home financing. So the asset class got crushed and lenders did not like it. And that was actually an opportunity for me in the beginning because I was able to structure owner financing. The regional banks, the institutional banks, they didn't have any interest in financing mobile home communities at scale. It is a popular asset class for banks to finance, but there's a wide variety of types of parks, and the lower income, lower yielding, cash flowing parks, banks aren't too excited about. So the first one is commercial banks, which are your larger institutional banks. There is financing available, but they need to be quality stabilized communities, meaning 80% or more occupancy and that they debt cover day one. Second option is regional banks. Regional banks understand the asset a little bit better when it's smaller or when it's in their area of lending, and they are willing to be a little more flexible if the property doesn't cash flow day one, but you give them a plan that shows them this is how the asset will eventually cash flow, and if you have some type of track record or credibility in the space. Third, my favorite, is owner financing. This is where the owner carries the mortgage, where they structure a mortgage with you as the buyer. And they will do that many times because, one, they do not want to get hit on capital gains taxes, where they can do an installment sale, which is the same thing as owner carrying financing. And that installment sale generates interest for them over time, where they get a 5, 6, 7, 8% interest rate. And they are able to receive income on their equity rather than selling and getting a large tax bill. And that way they get income and they still don't have to manage the property. Owner financing is how I started. It is a great way to start. And many times mobile home parks can't be financed by a traditional bank. And this is where owners, if they want to sell, structure financing to help get the property sold. If you are trying to get a mobile home park financing, reach out to my partners. They're Atlas Capital. They are great at financing mobile home parks. They financed 100 plus of them for me, more of them actually. They found some great national and regional contacts for local banks or institutional banks. I'll put their information below. Okay, next, let's look at active versus passive investing in parks. If you're just starting out, being an active investor is a full-time job. Now, it might not technically be a full-time job, but I would treat it like one because getting your hands on a mobile home park is highly management intensive. These are people's homes. These people are counting on you to run a safe, clean, affordable community. So if you're going to actively manage the property, you want an on-site presence. You can either hire an on-site property manager, which you're typically going to have to hire that person, train them, get them up to the speed on the systems. And if they can live in the community, they're going to treat it well because they are a resident and these are their neighbors. Or you can hire a greeter, someone that is there just their eyes and ears. They're greeting each person when they're moving in, or they get to know people by handing out notices if they're not paying, or if their debris or trash is all over their yard, or if they're parking too many cars. But having local presence is important, but it takes management. If you are going to third-party manage, meaning you're going to hire someone and they're going to manage the mobile home park, be careful. I have not found a strong third-party management company that will manage my mobile home parks. That's why I have my own staff, or I have a strategic partner where they have a management company, but they are very integrated into my company, and we have a partnership around managing just my assets. That is a great arrangement or relationship where you have a little bit more control, you're still asset managing, and you have the ability to make changes quickly rather than just putting it on a third-party manager to solve all the problems, manage all the tenants, collect all the rents. It just hasn't worked out that smoothly, and it's very different than apartments where you can hire an apartment manager and you can count on them because they manage tens of thousands of units. That's not the case in the mobile home park space. Now, if you're passively investing in mobile home parks, there's a few options. Number one, you can invest in a partnership or syndication. These are also called joint ventures. You will be with other partners that are funding the deal, that are working on different aspects of the deal, and you're partially active in getting the business actually ran and improved. And this is hands-on as well, but you have partners you can count on. Now, there's also the limited partnership where you are just investing as a limited partner and putting capital in the deal. And there's a managing member or someone that's controlling the partnership, and they are making the day-to-day decisions, and they are responsible for the actions of the investment. I would suggest starting out in those structures. That's how I started out, where I had a partner that knew a lot more than me in the business, and he managed the LLC or the partnership, and I learned a lot from that experience, giving me confidence then to be the managing member and creating my own partnerships in the future. Next limited partner activity is in private funds. So there are accredited investor funds. I have five actually. Patriot Holdings has a Patriot Fund 5 right now, and we bring in limited partners and we buy them in a fund structure. It's the 506C Reg D. It's accredited investors only are available to utilizing the fund or investing in the fund. And then you have a bucket of assets, 10, 15, 20 different mobile home parks or assets that the fund is dedicated to buying. And then all of the profits in the fund flow to investors. And then the general partner, which is myself, the fundraiser and sponsor of the fund. The nice thing about funds is you are passive. You do not have any management activity or liability concerns. You're just investing capital and looking for the sponsor or the manager to generate returns and take on the responsibility of the asset. The last option is real estate investment trusts, REITs. These are public companies that are traded on the public stock market, and you can buy shares of these companies. There's 3 or 4 main ones in the manufactured housing space. They typically get lower returns, but they do own institutional grade or high quality mobile home park assets like senior communities or affluent communities and mobile home parks like in Malibu, California, or parts of Florida, Texas. They own a wide range, but it is a lower return, yet you are a limited partner owning a stock, and rather than a unit in an LLC, you own a stock. And the nice thing about these is you can be liquid. You can sell your share any given time because there's a public market for it. And I'll do more videos in the future on mobile home park REITs. So how do you get started in mobile home park investing? Well, number one, education, watching this video here. So knowing the fundamentals, what to look for, right? City water, city sewer, if you can. Having a larger number of lots, 75 to 100 plus. Finding them in good areas. Finding parks that have good occupancy and good infrastructure. Now, they're not going to be perfect, but having a combination of those will limit the downside risk. And this is what I've learned over the years. Just because you can buy a great property at a great price on the surface, where you mean it cash flows, doesn't mean it's always a great investment. There can be ticking time bombs underneath the asset that you didn't know of and you didn't account for, and it can kill your returns. So get educated first. Second, choose a path. Are you going to be an active investor or passive investor? And then treat it seriously. If you're going to be an active investor, then dive in and learn from someone that has done it before. If you're going to be a passive investor, only invest in people that have an experience, a track record, someone that has done this many times. You do not want to be the guinea pig for some investor that is just starting out on these types of assets. You want someone that has experience. Number 3, start sourcing deals and opportunities. That means getting on the phone. This is how you make deals happen. All your brokers, all the different owners in your market that you want to pursue buying a park in those areas. Get to know the players and start to learn about what is a good deal, what is a bad deal based on the conversations that you're having with industry experts. And you're going to have to look at hundreds of deals before you do your first deal, or look at a handful or more of different sponsors or partnerships and compare the benefits of what they invest in, what the different types of parks they invest in, and why that partnership may fit your needs better than another. Next, build your team. So you need a lender, you need an accountant, you need a good deal sourcing partner, someone that's going to run the deals, and you're going to need a good operator or manager. So these are critical people that you will need regardless if you're active or a passive investor. So focus on building the right team over time. And then lastly, right, take action. If you don't take action, none of this stuff matters and you wasted all this time watching the video. So it's about getting on the phone, even if you sound foolish, even if you don't know what you're talking about, with a partnership or with a deal that you're buying yourself and actively managing. Ask questions. There's nothing wrong with asking questions where if you don't know it, then don't invest in it. I highly subscribe to understanding what you're investing in for you to be a knowledgeable investor and to protect your downside. So now you know what to look for in buying a great mobile home park investment. In this next video, I am going to show you how to evaluate the numbers on a mobile home park value add deal. This way, you will not only know the attributes of a park, but what the numbers should look like and where you could get burned.